Welcome to the Western Region Market Watch, brought to you by Real Estate Business Intelligence and MRIS Company. Let's take a look at the most recent activity in the Western Region housing market, which includes these areas. In December, all eyes were on Washington, D.C., gauging the likelihood of an agreement between Congress and the White House to avoid the fiscal cliff. With a partial deal on taxes completed, there are still important unresolved issues, resolving sequestration and raising the debt limit. Partisanship surrounding these issues will produce lingering uncertainty for the next 2.5 months. Despite the political wrangling, in December, the national economy continued its steady pace of economic growth. The U.S. added another 155,000 jobs. Over the 12-month period from December 2011 to December 2012, the national economy grew by 1.8 million jobs, with growth broadly across the private sector. And the unemployment rate held steady at 7.8%. The year ended on an up note for the U.S. housing market, and conditions continue to improve. Most experts believe 2013 will be a good year for sellers. Inventories are still low, prices are rising, and underwriting guidelines for new mortgages are becoming more uniform. But the lack of uncertainty on fiscal issues will continue to rein in the potential for a more robust recovery and will likely result in continued slow, though steady, economic growth nationally. The local economy in the Western region continues to be lackluster. The region is down about 80 jobs compared to a year ago, and the unemployment rate ticked up to 6.3% from 6.2% in November. There were 291 sales in the Western region housing market in December, 3% higher than this time last year. Year-over-year sales growth has been consistent throughout 2012, rising 10 out of 12 months, which signals strengthening demand. There were 266 new pending contracts in December, up 10% from last year, but down from November, which is in line with seasonal patterns. The most striking aspect of the 2012 market has been the diminishing supply of homes for sale. Active listings continue to plunge and have fallen to their lowest level since March 2006. There were 3,082 active listings at the end of December, almost 6% below this time last year. The pattern appears to be changing with new listings, however, which have been hovering around 2011 levels for the past 6 months. There were 350 new listings in December, down only 2% from last year. At $159,900, the median sale price is up almost 11% from December 2011. The low supply of active listings is putting upward pressure on the median sale price. However, the median days on market remains unchanged from last year at 84 days. As we continue through the winter months, it's unlikely that a dramatic surge of new listings will enter the market. This should keep upward pressure on prices as long as buyers remain active. However, the scarcity of inventory and the lingering fiscal uncertainty at the national level will continue to influence buyers and sellers and could create drag on the spring market. That's the Western Region Market Watch for this month. Check back next month for the latest.